Okay, sounds like people can hear us.
Yeah.
So let's switch to this one.
Well, while we're waiting for people to ask some questions, I think we can talk about general market conditions. Random,
Yeah.
get started. This has been a miserable few months, I would say. Definitely the last few weeks, but what's standing out to me is every bit of strength is getting sold. It's just something to keep in mind. Uh, but nothing's really like breaking down hard. I'm not seeing the volume that I want to. So I'm a bit more skeptical on these breakdowns. But price action is telling us right now that everything that pops is being sold. So you got to be defensive. You got to be small. Um, with the VIX high, I've been refraining from taking too many calls or too many puts because even if you're right, you'll end up being wrong because of premiums. If the price doesn't accelerate fast enough to complement the acceleration in the VIX premiums, then you're going to end up losing on a trade, even though you're right on the correct direction. So I'm in general in these moments more cash than I am in trades. You'll see I've probably taken a handful of trades over the last week and a half. They're small, so even if I'm getting smoked on them, I'm not losing the bank. So that's important here. We have a downtrend, but it's not like an accelerated downtrend. It may now after the close below the 819 pivot, but that's something we need to watch for tomorrow to see if we see follow through. Random, your thoughts?
Yeah, so I would say I'm totally in agreement with you that, this is not a time to be brave. I do think that a lot of what we've been seeing is end of month action. We keep our thought process that it's unlikely to get a major sell-off before earnings is, you know, it just doesn't seem like a plausible scenario. It doesn't mean that it's not going to happen, but it just seems unlikely to me from my perspective. Um, I was trying to catch the bottom today and yesterday unsuccessfully. I still think we gap up tomorrow. So I reduced exposure overnight, but I'm still holding some stuff. And the fact that Netflix is holding, even with the sell-off towards the end of the day, which was significant, but it was still, a pretty decent hold of 610, indicates to me that, there's still risk on mentality, at least on some of the tickers.
Yeah, I think that's the. It's been a decade, or so, probably even longer, but almost a decade that we tend to get these weak moments right before earnings starts, and everyone gets bearish, and people start buying puts, and all of a sudden it runs the other way. So until I see that trend change, so like going into the middle of October, right around when bank earnings start, I think the first one is either the 13th or 14th of October in terms of banks. If we see continued weakness, then that's something I um, definitely be watching for a massive trend change, and gotta keep that as in the back of your head as in like, oh wow, okay, so that's quite different from the last decade of action. But there's some things that to me are also sticking out is the 10 years not making new highs. That's 3 days in a row. Doji, that we've gone down. You see VIX is relatively muted. What, it was up 2.5% on what seemed like a terrible day or a terrible couple of days. We're still only sitting at 23. So there's a few mixed signals that needs to still play out, but that suggests to me that we're not that scared here. And looking at some of the monthly charts, there's definitely some cause for concern. Um, Amazon put in a bearish engulfing on the monthly. Google put in a bearish engulfing on the monthly. Amazon was on lighter volume than the prior month, which is kind of impressive considering August is a summer month, but just stuff to keep in mind. But if you guys have any questions, please write them in the chat and we can try to go through some of that. Otherwise, it's probably going to be me and random just talking back and forth. Go through some chats.
Yeah, hold on. I'll fix the echo. I truly apologize because I'm really new to this streaming software. So there's okay.
Random and I are doing this only for the second time, so just bear with us. We'll get it all sorted out as we do more of these in terms of echoes and just in general market, just general technical issues.
Is the echo solved now?
Yeah, that's right. You need to hear it twice. Absolutely. I think I know it's been a brutal couple of weeks, guys. You're not alone. We're in the same boat. We're trying to catch little pieces here and there. We caught some Netflix, some Roku, some other small ones, but nothing. This is typical when it's not trending. So just stick with it. I think you'll see better trends. Even if it's a downtrend, you'll see better trends moving forward.
Yep, that's GP talking. So what we'll try to do, don't try to scramble for questions and everything. We'll try to do this every other week. I know that we're already not doing it every other week, but at least we're trying. So it's okay if if there's no questions and we need to wrap up early. We'll try to go into the rhythm of doing this more regularly.
Yeah, definitely. We'll be doing more of these regularly. What I would say is, are there any things that you guys are watching for that concern you, or any charts that you're looking for that kind of give you pause or concern? And we can take a look at that as well for you. But I think the general overall theme is preserve your capital, preserve your mental capital, preserve everything you can at this moment, and wait for the market to trend. Either way, when you're trending, it'll be easier. When you're not, this is choppy. You're seeing 20, 30, 40 point clips in a 5-minute bar on the NASDAQ futures, which is not normal, but that's general volatility, right? So there's something you have to keep in mind.
Yep. And Sunil, it's a this is the $1 million question. It could be just end of month. It could be the beginning of something much bigger. There is a lot of broken technicals here. People are saying, excuse me, this is the debt ceiling all over the place, and I don't believe the debt ceiling is a real thing. Our elected officials are stupid, but not that stupid. It's going to be a complete financial meltdown if they don't raise the debt ceiling. So one way or another, it's going to get resolved. So my gut feeling, this is an aggressive end of month selling, but you never know, right? It could trigger some sell programs, and it's just an escalating thing. And once a lot of technicals are broken, and you've got a lot of MACD crosses on daily charts, then you need to be mindful for excuse me, for risk. Now the next question that nobody's asking is why aren't you guys shorting or hedging or doing all of that? It's just very, very hard to short after you're so extended to the downside. I can try, let's see if I can show this. Okay. So this should come up. So let's take the Qs, for example, and this is an ATR band on the Qs. So we're down to, between 2 and 3 ATRs. This is Keltner channels, if anybody is curious about it, which is the average true range of movements, which gets adjusted based on the last 20 days. What you're seeing here, and look at from historical perspective.
Hey, Random, are you sharing your screen?
Yeah. Oh, sorry, I did not click transition. Okay, it should show up with a lag. So okay, so what what I'm showing here basically is, three Keltner channels, one ATR, two ATRs, and three ATRs across the Qs. And my point is that typically when you get to anywhere between 2 and 3 ATRs, you get a really strong snapback rally, even if it's a bear market. So let me go back here. So this is the COVID sell-off, right? So the moment you go into 3 ADRs, it's very, very hard to stay there. This is something very, very rare. But if you look at the continuation, every time we hit this lower band, we bounce back. We hit this lower band. This is a very bearish sentiment that we can't even get to the midline. The midline is, by the way, I think the 20 SMA. Same thing here. We drop to 2 ADRs, we have to bounce back to the mean. It doesn't mean that everything is great and and nice. It just means that it's very hard to short a market, depending on where we're at right now. This is the main reason why I'm constantly long right now, is because I don't know if we're going to go back to new highs. I'm pretty sure that we'll snap back at least into the mean before anything else happens. My other point that I wanted to make is that this is a fairly structured sell-off. This is not a crash, right? It's a diagonal. It's not pretty, but it's not, end of the world type of thing, right? This is end of the world. This is end of the world. This is end of the world. So far, it's been fairly organized. I'm not saying that tomorrow we won't get, possibly something like this. But right now, this looks structured to me. Anything?
Yeah, it's very structured. And I think the thing that I'm noticing is that there's just a general lack of volume. Um, so it's not, to me, um, to me, it wouldn't seem that way, that it's institutional, or if it's just selling, it's hitting stop losses, so some volume kicks in, but it's nowhere close to the volume that I would expect with how bearish the sentiment is. But what you will see is the indices are getting a tremendous amount of volume. I think the Q's volume dates back to, um, it's, yes, 2 days ago, the most volume since, what am I looking at here? I think back to March, right? So, but you're not seeing that in individual names. And I think the biggest thing I'm having a little bit reconciling is the names underneath all these indices are getting smoked. Like you'll look at all the former growth names, they've all just relentlessly being sold. None of it's crazy volume, but it's consistently down, up $3, down red by the day, um, up $3 on a bounce, down red by the day, or barely closing green. Um, and it's just consistently being sold off. I don't know about you, Random. It feels like it's an overstay of shorts or sellers, and that the mean reversion that you're talking about is looking more and more likely. But we got to see the price action to
Yeah,
confirm it. Right now, we're not seeing any of it.
yeah, price action rules. And I just one more
Yeah.
point I wanted to make. So you can actually see the channel here on the Qs, which has been on since September 20, and this is a fairly organized channel. And again, you look at the same trend line. I think this is a similar scenario where we hit the top of the channel, we broke off the trend line, we dropped, we bounced, we dropped again, we got to the bottom of the channel. So I'm looking for a similar bounce here, potentially leading us to the bottom of the channel, just a repeat of the same scenario. Not saying history repeats, but sometimes we may just hit the lower channel here at 349 and then just continue grinding higher. We're getting, oops, sorry, this is not what I meant to do. So we're getting close to earnings, which is around here. So, just trying to illustrate what we're going to do. So either we bounce and do this, right, by October, or the other likely scenarios, we dump tomorrow and then start grinding higher again. I have no idea which one is going to be.
Hey, Random, do you have a RSI on yours? That's the divergence that I keep seeing showing up. Look at
Uh,
the RSI
I need I need I need
on
to dust off the RSI indicator.
on the Qs. We're making new lows on the Qs, but the RSI seems to be making newer highs.
Oh no, it's not. No.
Oh no, it's going lower. Sorry. Nope, I take that back. My chart just wasn't updating.
Okay. Do you want to share
You
your
don't have to do
screen
it.
to show that, or?
No,
Okay.
if it was something worth showing.
Okay.
Nope, chart just wasn't updating because Thinkorswim's a piece of shit.
Okay. Let's look at a
Um,
couple of questions. I saw a few things showing up. Um, you guys can hear both of us, right? I'm just double checking. Nothing on screen.
I can see your screen now, so I think it was just a transition.
Okay. Okay. I'll just go in a reverse sequence, so I'll try to get to all the questions. Would be good to show a few charts like top three. Not sure I understand ARG. Oh, it's ARC. Sorry. What it means. Um, if you can clarify what you meant on.
Top three setups. I would just start with Netflix.
Okay,
Random.
let's do.
I think that's probably what's
What's in
what's
everybody?
standing out to both of us. Is like,
Yes.
well, Netflix been a garbage for a better part of the last 18 months, and the insane amount of strength on this stock while the rest of the market is correcting leaves me. I'm like, well, if you were selling, you'd be selling everything. There's no questions asked.
Yeah. So, and I can give my perspective, and then GP, you can give your perspective, which I think is
Yeah.
similar but with some subtleties. And again, I apologize for the messy chart. This is live, so I cannot clean up my charts while talking. So if you look at Netflix, the overall behavior since, early days, this is 2012. So you get like a year plus of consolidation. This is a weekly chart. And then you get something around, 100 to 200% move over the course of the following year. So you see this box consolidation, box consolidation, box consolidation. Now, in the last time it did that, it consolidated, it moved in a linear fashion, and then it climaxed, right? You can see the difference. This is a 45-degree angle, and then it just goes directly up. Then it consolidated again for a period of, what is it, 92 bars, so 2 years. And so my thought process here is what we're seeing here. This is so the crappy last 2 years action is in essence, and I don't know if I can show this without. Okay, so this might look better. So my point is this is your linear progression, and I'm looking for it to climax from here, going straight up to, the to my tar to, 100 to 200% from the previous box consolidation here, which was, 420. So looking at, target of 800 to 1000 from here is not unrealistic based on the history. I don't know if that makes sense or I managed to express myself correctly. So if I look here, box consolidation, linear progression, then explosion, it was a 220% move from that box consolidation. So you have a box consolidation here, you have a linear progression here. So I'm looking for, if you look at 200% from here, that gets you to, oops, I think I just messed it up. Am I in a logarithmic chart? No. Okay, I don't know what I'm doing here, honestly. Um, so let's look for 200% here. One second. Technical difficulties. So anyway, that this just to illustrate that's let me move this. So 100% move from here, from 418 puts you well within 150% puts you well within the 1K range, which is kind of where I think we're going to get in the next 6 months. Now, another thing, and then I'll hand it over to GP. What we're seeing here is basically a cup and raised handle, right? This is, again, I'll try to make it a little bit, and I apologize for all the fibs. I just don't want to lose them because you're going to ask me for levels soon, and I need those for the levels. But what we're seeing here is, right, this is the cup, and let me just illustrate this. Just make it a bit more visible. All right, this is a weekly chart. So you've got this handle, you've got this cup. It's a raised handle, which is more rare, but that's typically more bullish. It means that people were trying to chase this, but they couldn't hold it back, so they had to consolidate it above the previous cup or above the neckline of the cup. And now we're breaking off, right? The last breakout is clear breakout from that consolidation period. When that happens, right? So you've got another, so this cup is 425 down to 230, so that's about 200 points from the breakout point. So you're looking at 520 plus 200 points, that's 720. So another way to look at it again on a weekly basis, and my gut feeling is if the market doesn't crap out, right, this is your consolidation, so you're going to see a straight up motion. It could start as early as next week, or it can continue beyond that. Or it can continue just until, to start from earnings. Nobody really knows, but so far, if the market participates, then it should cooperate. Now, the reason, and one last thing, and then I'll let GP talk about that. But my point, and this is the reason why I was bullish about it on Monday, is, we had a clear breakout from this point, right, from 511 to 613 over the course of what, 4 or 5 weeks. And then we had a 3 week space, and Netflix in the old days used to love 3 week spaces. So you would get a high, you would get a 2 weeks pull, and then you would get another breakout, which is either in the third or the fourth week. And that's why, the moment we had the 2 weeks lapse, I was looking at either this week or next week position to go. and honestly it didn't fail. So I can look at previous instances where we had those 3 weeks. So here's another one, right? It ran 1, 2, 3, and then it just continues higher. Um, Similar here, it ran 1, 2, 3, and then just continues higher. So Netflix used to, in the good old days, it used to love 3 week spaces, and that was my assumption that suddenly Netflix became a leader after 18 months of, causing so much pain. Then, I'll give it the benefit of the doubt that it might want to replicate those 3 week spaces patterns. So,
Yep.
GP, do you want to give you?
I'm gonna just leave your screen up there. I think just what Netflix, as we're talking about the good old days, Netflix when it's ready to move, it starts clearing all-time highs before earnings, and typically starts ramping into earnings, and then clear just takes off after that. So what we're seeing here, and the previous all-time high was the January all-time high, which is 593 ish. It took, I talked about it a few times. It took like 4 or 5 days. It kept trying, and then yesterday just demolished it. And it's starting to move above. And if you look at 2018 is probably the most recent pattern. It went into I think the high all-time high was 205, and it pushed to 225 into earnings. So about a 10% move into earnings from prior all-time highs, and then took off for another 25% afterwards. So I think that's part of why we're both um, in the trade, because we saw it happening. And you'd like to think that today's candle is a bearish candle, and you could potentially look at that and be like, yeah, that is a bearish candle. It's a tail, shooting star, whatever you want to call it. But what, and a round number too, right? On top of all that stuff. And it might as well be. But the things about this candle that stick out to me is, which is why I sold some in the morning, but still holding on to most of my position, is um, because even though it's a tail, the entire body of the candle was essentially above yesterday's high, right? So yes, it couldn't push further. It's end of month. There's a lot of repositioning and stuff happening, but it still managed to hold prior day's high the entire day, even on this sell-off, which Netflix loves doing in the last 15 minutes. It still managed to hold prior day's high. And if it had broken that, I would have rethought a little bit or taken some profits more. But that's why I'm still holding. And they're for next week. So have a few more days um, to kind of watch it play out. But this, a typical cup and handle, not the one that we're talking about, which is a higher handle, which is more of a rare case, shows more bullishness. It's about a 30% move from the top of the cup, which is 593 times 1.3. So you're looking at, about 750. So 720 to 750 is the range that we're kind of looking for this move out. There, it's been a long consolidation. So I'm hoping the power stays through it. But this is also why it keeps us hopeful on the rest of the market. You just don't typically see um,
You wouldn't
a
you
stop
wouldn't see
or
Netflix going and printing and holding new all-time highs if market participants didn't believe the market has, further downside, or did believe.
yeah,
So
exactly. Like there's not everyone saying, you know what, sell everything, Amazon, Apple, Google, everything, but don't forget buy some Netflix. That it's just not happening, right? Like that's not the logic that this goes in. It'd be like we're generally worried about the debt ceiling. We're gonna start trimming and selling almost every position we have, or every position we have. Why would when if we're on the verge of a major correction, which we might be, we're gonna have to see how this plays out. Uh, it's it's baby with the bathwater. Look at March 2020. They didn't give two craps about what it was. There was things like if you're watching Carvana went from like 180, 190 to like $22. Wayfair got smoked. Literally everything. It was just sell as much as you can, as fast as you can. We don't know where this is going. So we're not in that position at this moment. Might as well might happen tomorrow, or we might bounce. I don't know. We're not fortune tellers in terms of in terms of in terms of market movements. We're just trying to give ourselves the best chance of kind of succeeding here. I think one of the questions that was asked that I was going to address.
Just one more thing I
Yeah,
wanted to add to your point. So, the official all-time high is 615.27, but I would argue this is just an overshoot, a few more shorts that were left hanging out there, right? This is a 1 hour chart, right? We've got one close above that line, another close above that line, and then immediately it kind of pulled back. So we're still holding that all-time high, right? This is to me an overshoot more than anything. And then if you look closely, right, we've got a little inverse head and shoulder here that's still holding the confirmation, right? Even if this is an all-time high, you've got a very pretty inverse head and shoulder, which is 40 points deep. So you're looking at 650 from here. That's another thing I wanted to illustrate here.
yeah. And I think so. Just the one other thing, if not if the market, it's humbling most of us. It doesn't give you more than like 3 minutes of pleasure, and then you get smoked. But it's not fun. It's not terrible. Yeah, I know. I'm smiling, but then been doing this a long time that you can't help but smile on this type of action. I think if it's impacting you in a way that's negative, take some time off, take a few days, whatever it needs to be. And if that's something you can't do, switch from. I was talking to one of our other members via private chat, and it's just switch to doing 100 shares of a stock that seems range bound. I gave him the example of Beyond, right? Beyond on 75% of the days trades between the lows and highs of the prior day, right? So you can easily buy the low and sell the high. You buy 100 shares, you make $100, $200. Get your confidence back, right? Get some wins under your belt. 100 shares is $10,000. You can trade that. Should be able to. Hopefully, you can trade that back and forth, and get a few wins under your belt. It really helps to get back your mental capital if you're losing some of it here and you're kind of just kind of done with the market or just taking a look at it. Just give yourself a moment to breathe. This market's not easy by any means, and options are even harder with the VIX pricings and all the shenanigans that happens. I'm just noticing a lot more these days. Just take yourself out of the options game and try some commons. It's the same trades that we're taking, but you can just try them with the commons, and you'll get the 50 cents, $1, a couple dollars on 100 shares, and you'll make a few. You get like 4 or 5 of those in a day. That's $400 or $500. That's not terrible, but it also helps instill some confidence back into some of your trades.
Yeah, it's the important thing is that honestly the market is not out there to get you. It's out there to get everyone, and you just get caught in the crossfire. So it's nothing personal, but there are algos that their intention is to burn stops and bounce and to create fake breakouts and fail just to get shorts and longs out of the game and hunt for liquidity. So it's nothing personal, it's just that you're getting caught in the crossfire.
Yeah, absolutely. You can see it on a daily. You can see it on an intraday basis. It's literally high of day and then gaps down the immediate next candle. There's not much you can do about that besides watch it, right? Give yourself time or not participate. It's not breaking down. It's not breaking out. It goes low of day and then immediately has a gap up, and you're like, how do you play this? Basically, the answer is you don't, right? You don't. You're gonna get tossed around like a little child, right? It's just gonna not be fun. So give yourself a moment to breathe. You guys are not the only ones feeling the pain. It's all of us. Random I think you probably agree
Oh
with
yeah.
that statement as well. It's not easy.
It's far from. It's been a painful week, but that's fortunately Netflix helped a little bit, but it's still been a painful week. So
Yeah, unless you decide to go all in on Netflix, you're getting smoked in
yeah,
every other place.
yeah. And I still think if the market. So the reason why and I try to explain it on my tab, but the reason why I keep insisting on Google is that even though it seems broken, Google has been the previous leader, right? So if I look at, let's pull out the chart, that's going to be helpful. So, theoretically, this is a broken chart and Google needs to go down and fail. It lost the uptrend and all of that, um, terminology. The thing that I'm looking for or I'm thinking of is basically that, this has been a very strong leader through the last year or so. So I don't think it's done. Institutions don't go in and out of positions, in less than 12 to 24 months. So it could be that they're going to start lagging out, but I sense that, fundamentally Google has a lot of good things going for it. So with earnings just around the corner, right? It's in I think the week of the 28th, and after such a significant sell-off, right? If I pull the free ATR bands, where again we're at minus three ATRs, and you can see that Google rarely got to minus three ATRs. So I'm looking for, considering that it's such a leader um, and the assumption that the market should bounce here, which is, it could also be invalidated. My thought process is that Google at least reclaims the channel, and then I'm layering into that, the 50 SMA. So once Google likes to cross the 50 SMA, that's usually leads to a massive move. That's when you get those, weeks of 200 points move. So let's just to illustrate that. So hit the 50 SMA, moved from 1500 to 1800 over, a few trading days. 50 SMA, it kind of chopped around it, chop. Then it retested it and it moved from 1780 to, this was with earnings, to 2100. Again, 50 SMA bounced up here. Um, this was more of a channel bounce. But my point is that once Google crosses the 50, it usually leads to a very aggressive move. So the thought process behind it, which I tried to explain in text, is so if we get return to means bounds and we get back into this channel, so it's not unreasonable to think that we're going to into earnings. It's not unlikely to think that we're going to hit the 2900s again, which is, could be a phenomenal play. So it's well worth the risk reward. I'm not looking for, to buying something at 4 and selling at 6. I'm looking to buy something at 4 and selling it at, 30, 40. Um, that's why I'm allowing it a little bit of more leeway. And tomorrow, if the market bounces, I will be looking at Google to, if we can clear today's candles high, which is 2710, then we're definitely going to see a reversal that could take us all the way back to at least the 50 SMA. So that's an easy additional 60, 70 points bounce on a Friday, which could be phenomenal. So Arg also asked about Weber, and I think other people have asked about Weber. This is I shared the chart on chat. So when I'm looking at IPO basis, typically you have one fake breakout, you have one fake breakdown, and then you get the true breakout, which is exactly what's happening here, right? We've got a range bound. Again, you can see that it's been right? It's been within two ADRs so far, and finally it's breaking out. If we get another bullish candle, then it's confirmation for breakout. The levels that I gave are, the previous all-time high, which is 2044, and what I typically look for is a 50% move. Doesn't mean that we're getting it, but 50% move will put you up at 26 bucks. That's your typical thing. And just to show you how it worked before, where's, well, let's take this one, right? We're getting, um, We're getting the breakout, then we're getting the range breakout, and from here you got close to 50% move, right? We got to all the way up to 204, and I think the target was 220. Same for Sprint, not Sprint, Sentinel 1, right? The base, you get the wedge breakout, you get the real breakout. So from here, 54 went all the way up to 74, which is about also a 50% move, I think, more or less, at 35%. So if I'm moving this to Weber, what I'm expecting over the course of the next week, we're going to see a move up to, mid 20s, easy. And this is again another cult, as anybody who likes to grill loves their Weber. So, I think this one and Cook, which has been also a little bit annoying so far, but it's trying, right? At some point, this is going to reverse course. Um, so those are cult products that people who have them will swear their life based on them. And to me, this is like an iPhone, like a Tesla, like people with brand loyalty. Those are brands that do the best. So to me, Traeger and Weber and all of those guys will do well. That's at least what I'm betting on.
Yep,
Yeah.
Sonos, all of them, right? Like Beyond, right?
Well, okay. There was another question on Beyond, which I'm not sure if it was
Yes,
a
there was, but let's not talk about it because it's garbage. No,
which was
I'm
well,
joking.
it's I'm not sure if it was a question or a rant, but that's so
Definitely looked like a rant.
yeah. I took Beyond. So I took Beyond today because of the double bottom here, right? This is what I was looking at. Um, so I'm looking at this candle low, which was 104, and today we hit 104. So my gut feeling is that this double bottom should hold, especially with support here, which was pretty strong. So I don't think we're going to go back to two digits on Beyond. And I'm looking at this, and I was chatting with GP yesterday about this. This is a very tight consolidation, or at least the way I'm looking at this, right? You're seeing a very structured rejection of trend lines, right? You can see the body of the candles is very narrow compared to the action. Like every time it hits the top, it gets sold off, sold off. This is daily candles. Same here, gets sold off. It gets pushed back, but the fact that it's also holding the bottom, and you can see the buyers showing up here, 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 this tells me that somebody's accumulating. I don't know if it happens tomorrow or next month or in 2 years from now, but somebody is definitely buying in this range, is loading up on Beyond. And since they haven't got a full position, every time it gets too pricey for them, they dump a big block and push it down. So, it will fade, they can buy more, and then again and again and again. At some point, they will, I think, finish up the liquidity available to them in this range, and they'll have to start doing the same trick higher, or just assume that they've got a full position.
Yeah, that's 100%. I'm gonna also share my screen here. Hold
Yeah,
on
I
one
need
second.
to. This might be a little bit tricky for me. Hold on, let me see.
Can you see it?
Not yet. I need to add it as a source, I think. Just one second. Technical difficulties. Okay. Okay. Should. Okay. Your screen should show up in a few seconds.
No, no.
You can start talking.
Yeah, yeah,
There's a
that's
lag
fine.
in
That's
the
fine.
display. It will show up in YouTube in a few seconds.
Yeah, yeah. So the reiteration of what Random was saying is that the difference between this time and other times is that the premiums have been absolutely destroyed in beyond. So the thought process is that it's a huge short. All the news that's coming out is positive. Yet it's not moving. Is that it's coiling, it's accumulating for the news that they can't stop it from moving higher, right? Where the people do actually show up buying. Right now it's retail, it's weekends we're selling. It's the volumes not there on the sell off here. Yet it still keeps going. And if you're looking at the options activity, it is pinned by options activity has been for a really long time. So what you're looking at is just people like to call it manipulation. I call as Random was saying, this is how they accumulate. Right, they frustrate the hell out of you. The volume profile, that area that the Random was talking about, it is solid. That 130 to 135 range is absolutely a solid volume profile. You're sitting well under that. They're nearly 30% under that. So they're just facing. You're looking at a company that's still just had its largest revenue quarter ever. You're looking at lots of institutions adding on a quarterly basis. The price of like any of those. So just something to keep in mind. And there's the options are so cheap that we're buying 20 cents. I'll probably doing it week after week until we get that big move. Because honestly, when that big move happens, these 20-cent options go to $10, $15, $20. So you might risk $500-$600 a week, but the one week where it does go, you're going to end up making 10, 20, 30 grand. And to me, that's worth the risk and reward. Maybe that sounds ludicrous, but that's just the way I'm seeing this. And what you'll notice is on the beyond chart is we're making lower closing lows. You'll see it right here. This is the lowest closing. This is the lowest closing since May, and yet we're the RSI is actually coming in higher, right? So it's actually making higher lows, and it's kind of basing this is an area. If you look at this RSI, this is an area of pretty good hold. If you're looking at the RSI across the board here. So we're just kind of waiting for it. Might happen after October. Might happen. Random said 2032. Was it? We don't know when. But it's there. It's there. 2032 exaggeration, obviously. Just something to keep in mind. So just that's one of the trades. I think the other trade that one of the top ones I'm watching is actually Roku. It's a bottom fishing play. It's been absolutely destroyed and 490 straight down, one day bounce, 376. It's been down 303 the other day. In a typical situation like this, five straight down, and the market not really looking all that hot. I would have expected a down, touch this pivot at 273, and then reverse, right? That's 2021. The technical games aren't the same. But what you said saw was an open above yesterday's low and put in an inside day, and was showing strength all day. And you can see on the chart that here we're making higher lows on the RSI, and this is not like a end all be all, but it's just something to notice that there's divergences forming, and you see a massive rise in the RSI today off the lows, and it continues to make lower highs. Higher lows, and all it did was an inside day. It didn't even take out yesterday yesterday's highs. So you're like, okay, well, this is probably a great reversal candle. You also see reversal candidate here. You also see there's a ton of horizontal support, right? And that horizontal support essentially kicked in. And the overall theme is if you're looking at the growth stocks, which got smoked yesterday, we're all kind of green and kind of trying to break higher, but the market just kept selling no matter what happened. So eventually they all kind of didn't close as well as they were, but you saw that there was buying. To me, is another one of those things is that if a bigger correction was forming, why would any of these be seeing green? Why wouldn't the red just continue, right? It hasn't like it not like it stopped. But so those are just some of the things I'm keeping in mind. Um, and top charts, Roku is one of them because Roku can have those. You can see it here, 100-point moves in 5 days has happened quite a few times here. So that's kind of what I'm watching because the premiums have come down and the risk reward situation here could be pretty big if it does reverse. So that's why we're watching. The other ones that are in that same boat are the ones that I've been talking about in chat: Square, Peloton, not T-Doc. T-Doc sucks, but Square, Peloton are the ones that are also showing up with strength into the end of month, which means people are buying into the end of month, or maybe just short covering. Could just be short covering. So something to watch for the next couple of weeks to see how we go. There was tons of activity that happened in these stocks too for October. So I'm curious to see if, like at Roku, they were buying the 370s, the 375s, the 400s for October, like throughout September. So I'm curious to see if any of this makes any difference as well. So just something to keep in mind. Random.
Yeah,
Random, you
I
there?
need
Yeah.
to. I was trying to fix the echo and I muted myself for that. But
Yeah,
I
no
think
worries.
the echo was coming from somewhere else. Yeah, I can. Well, if I disappear the Skype logo, then what will happen is then we lose GP. So that's part of the setup. I need to continue exploring the
Yeah, well,
system. Okay, so I think somebody asked about app as well as about what was else? Yes, Sunil asked a few questions that I did not understand, and I'll just, one of,
what were the questions?
let's see. Sorry, my.
Or bigger than end of month selling or bigger thumbs to
On
come? We
weekly
don't know.
trades, how do you set and watch for
Oh,
exit, stop losses, and overall price action, time frame, fibs, Bollinger Bands? I don't know what SNR is. I can try to answer in the generic way, and I hope I answer the question. Um, so I'm looking, it really depends on the setup or what I'm looking for. But typically I'm monitoring 5-minute charts, and it really depends if I created enough cushion or not. Typically it depends on the thesis of, if I trade a breakout, then I would look for, a breakout to hold, and I will give it some leeway, like a few points under the breakout point to make sure that, I'm not just getting washed out. If I'm trading a bounce, then, I don't mind buying when we're slamming into a level that I think there is a decent chance it's going to hold, and I'll give it, again, a few more, this is what I like to do with Google. Let me just share my screen and I'll try to illustrate that. Okay, so yeah, now I need to bring you back into audio. Okay, let's hope um, there's no echo now. So when I'm looking at Google, right? So if I'm looking at, let's do 5 minutes, right? So let's just for argument's sake, let's say I want to buy this double bottom, so I will I will look to buy, I will start looking to buy a little bit above that. I know that we're going to slam into that. I might wait until we see a bounce, or I'll just try to fish into a position, and then my stop loss would be, a few points under that. So if I bought, 73, then I'll stop it out, at 69 or something like that. Um, when
There's an
I'm
echo to be.
There's an echo.
That's what our
Okay. Can you say something, GP? Yeah. Let's see. I don't know why there's an echo now. Okay, it should work out now. Hopefully the echo stopped. Type in chat if it hasn't. Okay, so I was in the middle of, so I would look for that. Then, either I stop out or, let's just another things that I like to do. So let's assume that I was buying it here and I haven't stopped out, or, I bought it here and I haven't stopped out. And I know that my hard stop will be here, then I will typically, and I consider that a lower risk, I would add more to the position here, and then if I get stopped out, I get stopped out. It's a few points. It doesn't hurt as much, but if we bounce hard here, then I get a better entry. So that's why you see sometimes me adding just before getting stopped out is, you know, I don't mind adding if I know that I'm going to get stopped out shortly after. That's a minimal risk from my perspective. And again, I'm not sure if this is what you asked, Sunil. So I hope that covered the question. Um, and then you had a follow-up, which is what invalidates your thesis. And again, it depends on the thesis. If I buy a double bottom here, then double bottom could easily. Let me just try to illustrate that. So this is a double bottom, right? You undercut and then you bounced. So I usually on a large price ticker, I would give it a few points to hold. Um, or, if you want to play it safe, just wait for it to reclaim that high, right? Let it do whatever it do, but the moment it recovers, right, you do nothing, you do nothing, you do nothing, but the moment that it reclaims that previous low, then potentially you've got the first indication that this is a potentially double bottom. So this also is a potentially good buying point. The reason why I like to front run it is because typically what it does this, and then it just runs off, and then premium starts pumping up. So you try to chase it, chase it, chase it. The moment you get filled, then it pulls back, and then you have all the insecurities around, what's going to happen next. That's the reasoning behind my logic around that. It's not necessarily textbook, but this is kind of how I like to play it.
I don't
Um,
think anyone's seeing your chart to be.
oh
It's
crap.
my chart with
Yeah.
the Skype logo.
Okay. So I'm sorry. Definitely, being a YouTuber is not a profession that I should pursue. Okay. Let
Hey
me.
man, this is how we learn. No
Yes.
worries.
Okay. I apologize. I will do that again quickly. So my point here, if hopefully you can see my chart now. So if I'm looking to buy this double bottom, right, then I don't mind buying it here, getting closed, and then I would say to stop a few points under, because it still is about double bottom if you undercut and jump, and there's actually algos that are planned to do that because they want to hunt for liquidity of people who put their stop here. Um, it's completely legit that you just wait for it to bounce and reclaim the previous low, right? This is the first confirmation of a double bottom, is that you potentially have cleared that low. And the reason why I don't like to do it is because, what happens typically is once you go here, then it just runs like a banshee and then it starts kind of withering and die. And unless you hit the ask, you're going to get filled somewhere around here. So then you get a little bit of pain waiting for the next push up. Right. So that's kind of how I like to play it, and I hope that answered the question or makes sense. Um, there was a question about up, I think, and let me just double check here. Okay. Hood. JP, do you want to talk about Hood?
Yeah. Do you want to just share the chart on Hood? I
Yeah,
could talk about it. I think
sure.
there's not much on the chart in general. I just don't want to disrupt the flow of the screen sharing since we got it working right now.
Yeah.
But so Hood is an IPO, right? It's a new IPO. Um, it's also Kathy stock, unfortunately. But the reality of Hood is that we're trying to play the balance, and you have like a mini cup and handle sitting up here. It's getting to be a long handle, so this is not ideal for me, but these are more potential. It's kind of backtesting. If you look at Random's chart here, is it created a small cup here. It's now coming back in the handle and retesting that base that it formed. There's not a lot of data on here, so we're going based on very little small bases and very small kind of movements. And I think that's what I'm targeting over 85. I know that sounds ridiculous when it's sitting at 43 here, but that volume that just came in at the beginning is massive. So they're just, to me, this is like that. Random's talked about it a bunch of times. Is they're just kind of trying to push people out, and it wants to go higher. So we're in the October and November calls here, and they're destroying the premiums. Still a couple of weeks left, and the 50s are down to like 30 cents or something like that. It's nuts. It can make a 20% move in like 5 minutes, right? As we've seen with Hood in the past before. And what I'm seeing consistently on intraday is massive, massive volume that comes in. Um, to go up, but it just refuses to go up and then comes down on very little volume. So you have accumulation going on. So the question is trying to figure out the timing um, of when this happens. It could be December, it could be January. So if you're looking at wanting to get in and you want a little bit less headache, maybe look at the December, January calls. We're trying to play the cheaper short term ones here, and that's my target is it's crushing 85. Right, so uh, but there's a lot of supply there, so it might take some time. So I think that's my thought process. Random, what are you thinking?
So I illustrated where Kathy bought just to help people understand. Um, so again, this is an IPO. IPO, there's no rules. Like there's everything could happen, right? We had this tight consolidation here, which led to a pop. It's still holding that range. So to me, like if we lose the lows here, then it's probably not going to work out. But I'm, I'm trading those positions. I think we've got October 45s and 55s, and GP, I think you have 50s, and then I've got some Novembers. Like this, this looks to me as a base, right? You can actually look at this, right? This is your less perfect base, and at some point it will go. So I don't know. It, I don't like this fade, but the whole market is fading. So it's hard to say. Um, I think after tomorrow and Monday we'll get more clarity of what's going on.
Yeah, it's super organized too, the fade, and it's very tight fade. I
Yeah,
think that's what I'm saying. And if you're looking at that base, it literally just touched the bottom of that base, right?
yeah,
So,
exactly.
sorry, the top of that base.
So it's
And
retesting the breakout
yeah,
point, which is again very common in IPO stocks.
in
So
2021, it's very common in 2021 to breakout, fail, breakout, fail, breakout, fail,
Yeah,
and
here.
then continue. So
So Duolingo broke out, came back to retest the highs here. Monday, right? Broke out and bam. On this day, things looked pretty crappy, right? If you look at this chart, this looked like the end of the world, if you think about it. Right, it broke out the new all-time high and then it faded, but it only faded to test the thing and then it just next day complete reversal. Which else? Where's S? S, same thing. Um, right, broke out. Then you can see the candle, right? It almost reversed all the way down after printing new all-time high. In this case, it actually held the all-time high, but it's a very similar pattern that repeats itself over and over again.
yeah,
So you wanted to know about app. So to me, it's still within the range, right? This is right. You got a breakout, the fake breakout. You got the consolidation. You got a little bit of a breakdown, which turned out to be a double bottom. And right now we're kind of whooshing around. It looked like it was ready to break out, but it didn't. But it's fairly stable. There's no any crazy actions here, right? We're within plus minus 1 to 2 ADRs. This is not a crazy action by any mean. The only thing that I'm a little bit concerned about is that potentially this has been the IPO move, and we're going to wither and die here. I don't think that's the case, but this is a potential. So we got a pretty decent move, from 49 to 88 here over the course of a few weeks. So this is still structured. This is within 2 ADRs, so I think it's not the case, but I'm just kind of as a word of caution, kind of what I'm thinking about
that's
it.
probably par for the course in this market because it's just not trending, right? I think so. It's hard to find
Yeah.
um, even the bullish stocks like Upstart are starting to look a bit more suspect, right? Upstart, Asana was another one, I think. Um,
Well, this one is
right, and
actually
that
looking pretty decent.
what's that?
Upstart looks pretty decent here.
Yeah, but they're starting to kind of, it's not just straight up. So um, look at Asana was at 125 about 6 days ago. It's back at 100. Lightspeed got its kind of moment and got smoked based on some stupid short report. But that's just how this market works, unfortunately. They see a very extended chart and they take the opportunity to publish garbage in hopes that it causes some fear. Um, and that's just normal kind of. Some would call it manipulation. It's just what you kind of expect with this market.
By the way, fun
Personally,
fun fact, you see that breakdown of the consolidation of Upstart is where I stopped playing it. So,
yeah, I think
yeah.
all of us did.
Oh well. Okay. So,
But this is the thing, right? We don't know. We try to put ourselves in the position
yep.
that we can catch it, but it's not always easy, right? Upstart for some reason is working. Duolingo, just insane strength, right? So
Yeah.
then Hood, you have Hood. So it's always good to find the ones that people aren't paying attention to as much. But then you have Upstart, which everyone talks about, yet still keeps going bananas.
Yep. And one thing I wanted to highlight is, so if you look at Sentinel-1, right? This is just to illustrate. So S is done, right? There's nothing to really do here anymore. It made its move. It got to the high, and it's probably going to continue kind of dwelling around in this range for the next 6 months. At some point, the lockup expiration is going to go, and it will sell off more. So those IPO plays make their move. you play them and you move on. There's really not a lot to do from this point. It could, it could bounce, it can continue higher. I just that it's it's okay to say it's done and move on, and not hope for, just continuation or anything. It's a pattern that happens within the first few months of an IPO, and and then you go into the real life of, actually trading a stock. Oops.
Yeah. It's what's it typically around 12 to 18 months after IPO is when you start to see better trends and stuff like
Yeah.
that. It's
After
because
the
think
institutional
about
build a
how many,
position.
yeah, think about how many people aren't in the stock who are trying to get in. So they're not going to let you just keep buying and buying. They're going to want to bring it down, and they have more money than we do. So they play the game. But I think there's there's a lot to. I got to step out random now.
Yeah,
It's
I need
almost
to
5:30.
sign off.
But just my general thoughts is um, try to regain some of the mental capital that you might have lost over the last months. I know I am, so I'm just staying to small positions or cash. So trying to rebuild my own mental capital, um, and just give it some time. When we start trending, this will all seem like a lifetime ago, but right now we're not.
Yep. Okay, any last questions? Because I also need to sign off. We can just continue and people are still on, or did we just?
Yeah, I think people are on, but I would just share your final thoughts and we can do another one.
Yeah.
We can answer some more
So
questions.
my the big question is what happens tomorrow and on Monday. I think is going to set the tone after that. So if you look at what I think is going to happen, and again, I may be wrong, but if I'm looking at this is weekly, I wanted to do daily. So if you look, was that July? Yeah, so there was this sell-off on the end of June, which kind of got everybody worried that we're done and everything, and then it just continued higher. This is a little bit different, but I think similar. So this was when we were up running and everything. Um, I just I got a hunch that tomorrow we got either tomorrow or Monday we get a bounce, and if we don't, or the bounce is not significant enough, then we can start talking about trend reversals and shorting and everything. But I don't think we're there yet.
Yep, same here. I think we just got to watch it for the next few days.
Okay, guys.
End of month flows are typically bullish as well. So if those are not bullish tomorrow, just something to keep in mind.
Beginning of the month.
Right, beginning of month,
Yeah.
yeah. Especially and beginning of quarter are typically bullish.
Yeah. Okay, guys. See you tomorrow.
All right, bye guys.